Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Tuesday, May 26th. It's the day after a big holiday weekend, the weekend that kicks off the summer. We still have the COVID-19 concerns, but the markets are reopening. So here's what I'm going to do. I'm going to get into the global economy. Then I'm going to get into the weekly business cycle because we've got a lot of reports and federal data coming out. And then I'm going to give you my favorite sector, my favorite stock in that sector, and the best option to buy. How about that? Pretty good way to leave you this Monday, right? Tuesday, excuse me. So let's get into it right now. Investors, they're shifting their focus to how various nations are adapting to getting back to business while striving to keep new COVID-19 cases in check. And I got to be honest with you. I've read reports over the weekend. The pictures that I've seen, people are not respecting personal space and cases are increasing once again. So I don't know how this is going to happen. I'm hoping we're not going to have a second massive shutdown, but no one knows right now. It's a big question mark. Until that question mark is answered, we're going to have a lot of uncertainty. One thing we do know, it appears as what we were suspecting, that the number of cases is actually a lot lower than we initially expected is happening, because a lot of people seem to be having these antibodies and have been infected but don't show symptoms. So that's a positive, which shows that this is a lot more like the flu versus something freaky. It's actually one of those weird diseases, or viruses to be specific. I know about as much about medicine as I know about selling shoes. I'm being rhetoric. The point is that it seems to be very extreme. It doesn't impact most people, and then some people get really sick. So it's kind of it's one of those things. It's kind of like if you keep everyone at bay, most people don't get sick. So it's kind of like you have to keep it's tricky. It's really tricky. I like how some countries in Europe are dealing with it. They're protecting the old and the vulnerable, but they're giving the youngsters, people without any history of viruses or illnesses or any suppression of immune systems, free reign. So that's working out well. So let's get back into this. Sorry I had to get into it, but I wanted to give you a little update. U.S. shares, they're going to gain, with futures for the Dow Industrials adding 1.9 in the futures, for the S&P rising 1.8%. Traders are awaiting U.S. consumers' confidence data for May and home sales for April. That's coming later today. Indications that may give further clues into the severity of the downturn brought by the pandemic. In Japan, government is assessing commuter train usage, showing traffic was still much less than normal on Tuesday after the country lifted its pandemic state of emergency. Very interesting little clue there. Crude oil gained 77 cents. We're still showing a lot of short covering at this point. Prices rose. They're looking higher, but keep in mind, on the long-term basis, what we're seeing right now is a reaction. On the long-term basis, things are very soft. Let's look at the economy. Now, today, we got home sale prices. We got consumer confidence. That's going to be huge. These two report, new home sales and consumer confidence. As I said earlier, they're going to give us a good idea of how things are looking. I'm expecting consumer confidence to be a little bit better, starting to show a little strength, but new home sales to be weak. As a matter of fact, yesterday's LA Times and New York Times article showed that new home sales, the prices are staying fairly consistent, or off by a little bit. Not the commercial, I'm talking about residential market. Commercial market is going down. But the residential market, the volume is down, which is not that unusual during these type of climates. People back away, but prices stay steady. And then we have GDP on Thursday. That's going to be the biggest report of the quarter. Don't expect to see a lot of volatility till we see the GDP. We've got durable goods, GDP, and jobless claims, and Friday personal income, and Jerome Powell speaks. So I think we're going to see some volatility today, potentially midday. Then we're going to see a cool off, a strong cool off in volatility and trading range all the way till the first part of the day on Thursday, and that'll continue all the way till Friday. So expect a little blip in volatility today, lower volatility tomorrow, and then volatility picking up in the morning because we've got GDP. It's not going to be pretty at all. I mean, this GDP is not going to be showing us anything good. Consensus, remember, we were going positive 0.1% above the 2% rise, that threshold. We're now almost down 5%. All right. Now, if the number's better than 4.8, we probably will rally, but if it's 5.2 negative, it's not going to be pretty. In terms of jobless claims, oh boy. We're talking last week was 2 million. Consensus is 2 million. The average is 3 million. Consensus is 2 million. Anything below 2 million, 50 jobs loss will probably be beneficial. Again, look at the numbers. They're all over the place. But the average, the 4-week average is getting better, and that's the key. So anything below 1.8 million should be positive. Now, today's Tuesday. Let's talk about the strongest sector, and I want to give you an analysis of how I'm looking at stocks. So we start off, as always, nothing changes. We look at the top 10 sectors in the S&P 500. Technology, healthcare, consumer discretionary. These three are positive. The rest are negative. It's just that simple. If you're looking to go long, look at tech, which is also part consumer discretionary, or healthcare, or just don't. Just look at financial, energy, and industrial, real estate, utilities, consumer material for shorts, because they are not doing very well. Look at this, all negative over the last average. The three positive, 7.69, 1.34, 1.323, these top sectors. That's over 6 month, 3 month, and 1 month. The rest, negative. And don't look at the short term. Don't look at the last 30 days. Don't look at the last 60 days. Don't look at the last 6 months. Look at the average the way I do. Funds don't react as quickly as you think they do. So we still like technology. Let's look at the S&P 500. We got NVIDIA, which is a little overbought. It's up 33%. We got Regeneron. That's a biotech. We want to stay with tech. Tech is number one. Health is number two. So we look at Fortinet. Fortinet is a tech company. Now, I was split between Fortinet and PayPal. I like them both, but I do like Fortinet because their option premium is a little cheaper, and it has a slightly better percentage, 38.66 over 37.4. Let's go to Fortinet. The stock is pulling back. It's overbought right now. I would look for a pullback to the 130 level. I think we're going to hit the 130 level. Ticker symbol is FTNT. It's a very, very good stock. To give you some idea of what it does, it's network security. Network security is huge right now, especially internet traffic is much higher. COVID-19, internet security. People are not going out to work. They're working at home. Internet traffic actually is up quite a bit. The volume is up about 20%, 30% over typical. So you're going to see a lot of security issue for enterprise software, especially with enterprises, with people working at home right now without having a manager, center manager, a network manager at the office right now. Things are going to be different, and Fortinet is going to profit as a result. Let's look at Analysts Earnings. Look at this. Look at this. 9 strong buys, 11 holds, but 9 strong buys. That's very, very, very positive. And look at the price of the stock, making all-time highs. I love that. So let's look at the options. Now, we're looking for a pullback. We're going to look for a pullback right around the 130 level. I think we're going to make a little pullback there over the next few days. Let's look at options. I want to go out about 70 days if I can, 65, 70 days. 56 probably not good enough right now. 119 is too much. All right, 56 is fine. So here's the deal. We're going to wait for a pullback. If this option has less than 45 days before the pullback happens, we're going to go to the next expiration, which will have about 100 days left. But for now, we can always roll over. The price of the stock is 140. We're waiting for it to go up to about the 135-ish level. The 142 strike price, we would be buying 145 now at about 750. You probably want to wait for a pullback till where the 135 strike price option is trading at about 780 to 750. I would buy the 135 when it's trading below $8. How about this? Below $9, all right? So I would put a limit order at the 135 and I would keep it open for about 10 days. If it doesn't get filled, I would then go to the 918 and I would again go to the 135 and I would probably pay about 10 for that. And I'm looking for this stock to go above the high till about the 158 level. So you're going to be buying at about the 135-ish level, 130 level, and you're going to be selling it at about the 155, 160 level. You're going to buy the 135 strike price option, and you're going to buy the option that expires either 717 or 918. Do not hold the 717 option for more than 15 days. Do not hold the 918 option for more than 30 days, all right? And again, you want to buy this option between $8 and $9, the 135 strike price, all right? And don't hold it too long. Remember, after 30 days, option decay goes like this. So you got to be very careful. Again, the stock is Fortinet, FTNT. It's a network security stock. Very, very hot industry right now. The stock is trading at 142. You want to wait for it to trade between 135 and 130. And then you want to buy the option that's either expiring 717 or 918. And you want to buy the 135 strike price for less than $9. And I would only wait for this trade to set up for 10 trading sessions. If it doesn't set up in 10 trading sessions, forget about it. I'm going to give you a new juicy one next Tuesday. A good actionable trade with option criteria and entry, just like I did today. So folks, this global crisis has left a lot of things to chance. It has, it's true. But I'm certain that this rising stock that I'm looking at could be explosive. And if you think this is hot, wait till you see this. I want to give you the exact stock that's likely to make today's trade $3,680 in 10 trading sessions. Now, I've already predicted 66.10% return on one stock. And I have a feeling that this one's even bigger. Oh yeah, it's like that. Click the link below or the button at the end of this video. Get all the details. Again, this stock you've got to have in your portfolio. I'm going to give you the exact stock. I'm going to give you a ticker symbol. I'm going to give you an opportunity to make $3,680 in 10 days. But you got to take action. Follow the link below or the button at the end of this video. Please don't delay. Life is too short and opportunities right now are abundant. I'll talk to you guys soon. You have a wonderful, wonderful day.